You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi, it's Victor here from foreshowmarkets.com. In today's video, I will be teaching you what are trends in technical analysis. What is trends in technical analysis? Understanding trends in technical analysis. Okay, so remember, in the previous video we talked about the principles of technical analysis. Okay, and we said principle number one: all markets moves in trends. Okay, all market move in trends, all market move in cycles. Those together form one of the principles. Okay, so that is what we'll be looking at today. All market move in trends. So market moves in trends. I showed you examples of how market moves in trends. So what are the different types of trends in technical analysis? What are the different types of trends in the market? Simply meaning, how does the market behave? Okay, so different types of trend we have. Let's break that down, that into types of trends. Different types of trends we have is uptrend, one, downtrend, and then three, sideways market. Okay, so the market doesn't do more than this. Okay, the market doesn't do more than, it's either in an uptrend, it's either in a downtrend, or it's either in a sideways market. Okay, so once you understand these three market behaviors, then you know that what you need to be looking for at any point in time in the market is asking yourself the question: is the market in an uptrend, or is the market in a downtrend, or is the market in a sideways market? And once you are able to predict or forecast and analyze the trend before it happens, right, and that is your first step to making a profitable trade. Okay, so when the market is in an uptrend, your bias should be a buying bias. When the market is in a downtrend, your bias should be a selling bias. Okay, and when the market is in a sideways market, your bias should be both buying and selling. Okay, so sell bias, buy bias, and then here we buy and sell. And I will explain what I mean by these biases. Okay, so let's look at the first one: uptrend. What is an uptrend? What exactly is an uptrend? The simple definition for an uptrend is, as you can see, my mouse is, I forgot to switch on my mouse. So the simple definition of an uptrend is higher highs and higher lows. Simple definition of an uptrend is when the market is doing or making higher highs and higher lows. Okay, so I need to remind you that what we're doing now is under price action. Okay, remember we said technical analysis is divided into two: price, is it price action? Yes, price action. Well, it's all price. Technical analysis is all price action, basically. It's a bit confusing there. Technical analysis is all price action. Then you can break it into Japanese candlesticks. Okay, mathematical indicators, and then what's the last one? The last one is chart patterns. Okay, chart patterns. I hope I didn't confuse us the last time in the breakdown. So just off the top of my head, I've just brought this out. So maybe I hope I didn't make a mistake the last time. This is how I'm seeing it. So technical analysis is basically, you can basically say it's all price action. Okay, because so it all depends on the school of thought. Okay, some school of thought can lump up Japanese candlesticks and chart pattern under price action and separate mathematical indicators out of price action. Another school of thought can put all technical analysis as price action. So it all depends on the school of thought. No one can say one is right or one is wrong, but it doesn't matter whichever category it falls into. All that matters is you understand the concept and you are able to use it for trading. It's not about theory. It's not about going to write an exam to pass. It's about trading and making money. Okay, so definition of an uptrend. An uptrend is a market that is constantly making higher highs and higher lows. Okay, so what do we mean by higher highs and higher low? Okay, as you can see here to the left where we have uptrend, it simply means that the market starts from a low point here. As you can see here, it goes up, reasonably up, and then remember I said you don't expect the market to go up in a straight line. You should always expect a correction. Okay, when I started trading, we always had what you call fear of missing out. And when you see the market going up, maybe somewhere around here, you start feeling like you're going to miss out on a very big move, and then you jump in. And then when you jump in, you just see that the trade starts going against you negative. Okay, and when the market gets here, you see, wow, it's like I'm losing money. And then you close the trade, right? And then surprisingly, after you close the trade, the market does a big move up. And then you start feeling frustrated. This is what happens to 95% of traders, simply because they do not understand the basic definition of trends. Okay, so as a professional trader, you need to understand that the market will always do its correction. Okay, so when you feel that the market is too expensive, you need to wait for what we call a correction, which is what happens here. Okay, beginners usually buy here, right, and they will lose money down here, but professionals would rather wait for this pullback and buy, at a cheaper price. The market always gives you discount, and that is how you make a profit. Okay, so don't get frustrated out there. Make sure that you are analyzing your market properly. Okay, so we did a high here, right, and then as expected, the market does a pullback, right? But the trick there is that when it comes back, it doesn't come back to the previous low. If the price comes back to the previous low, it simply means that is not a trend. Okay, so from the low here, it now goes, price now moves higher than the previous high. Okay, so you can easily see that this is already a higher low. That means it's a low that is higher than at a higher level than the previous low. Okay, and then you have a higher high because it is a high that is at a level that is higher than the previous high. Okay, so once you start seeing a higher high and higher low, so for us to complete it, at least the basic trend, we need to have one higher high and one higher low. Okay, so one up, wave one, it goes up, wave one, wave two down, wave three up. We can start suspecting that immediately price goes above this previous high. We can start suspecting that a trend is forming. Okay, an uptrend is forming. An uptrend is forming. What's the definition for a downtrend? Definition for a downtrend simply is lower highs and lower lows. Okay, so this was done on purpose to see if my students were paying attention in class. So a downtrend is simply lower highs and lower lows, and so that means the price starts from a level and then starts coming down lower, and then as usual, based on the principle of technical analysis, market moves in trends, market moves in cycles, you expect that this is going to go up, correct or retrace, okay, but it's not going to go higher than the previous high and then come down lower to give us a what? Lower high. We have the lower high here because this lower high is at the level that is lower than the previous high, and then we have a lower low because this level is lower than the previous low. Okay, and once the price goes below this level, we start suspecting a downtrend. Okay, so that's basic concept of uptrend and downtrend. Then remember, we have the sideways market. Okay, so the trick with the sideways market is that it never forms an uptrend, it never forms a downtrend, it just keeps going up and down. So you see here, the price started here, okay, went up, okay, came down. Instead of it to go down and form a well-defined lower low, it stopped somewhere around the previous low here, right? Tried to go down lower, failed again, stopped around the previous low here again, and then went up. Okay, and then when it went up, instead of it to go above this high here to form a new high or a higher high, it failed, and so it starts going top to bottom, bottom to top, top to bottom, top to bottom to top. That is what you call a sideways market. So a sideways market is simply price action or price movement that is going sideways, up, down, no particular uptrend or no particular downtrend. Okay, of course, from here, between here and here, it forms a minor uptrend. Between here and here, it forms a minor downtrend. Between here and here, it forms a minor uptrend. Okay, so a sideways market is basically a combination of minor uptrends and minor downtrends between two particular tops and bottoms. We call them support and resistance, as you see in the next video. So when price is going in between a ceiling, the ceiling is what we have at the top there, and the floor is what we have at the bottom here. We have a sideways market. Okay, can we see an example? Let's look at euro dollar. Okay, so let's look at this chart here. From here to here, what kind of market do we see? Okay, of course your answer should be an uptrend. Why? Because the market started here, it went up. Okay, some guys would have bought here and started losing money as it's coming down, okay, and probably close their trade in a loss here, and then the market goes back up. But the smart guys will likely buy from anywhere around here at the bottom. Okay, so lower high goes up above the previous high very well, so that is what? Higher high, and then comes down low, but it doesn't come down below the previous low, so that's what makes this a higher low, and then goes up, makes a higher high, comes down, makes a higher low, like that. So you can see wave 1, wave 2, wave 3, wave 4. We can call the whole of this wave 5, or we can call this wave 5, wave 6, wave 7. Okay, so that is the way an uptrend forms. Let's look for a well-defined downtrend. This is an example of a down. This is a very, very strong downtrend. So down wave 1, a little bit of correction up, a higher, lower high there, then it comes down from a lower low. Okay, when it comes to euro dollar, the downtrends are usually very, very, very strong. Okay, so we have this one, wave 1 here, down, slight correction, and so some smart guys would have bought somewhere around here, okay, expecting the price to go down lower. But of course, a downtrend has not been confirmed here, so you may want to wait for this to break out below here to form a lower low. Then you can now see a downtrend has formed. Okay, let's do a graphical example just to recap. Your uptrend, price starts here, price goes up. This is where beginners would buy, and then they start losing money, price comes down. Okay, professionals will buy here, the beginners will probably close the trade in a loss here, and then it goes up. Okay, comes down, goes up. Okay, it's as simple as that. So this is what a low, this is what a high, this is what a higher low, this is what a higher high. Already from here, a trend has been established. The moment price breaks above here going up, okay, a trend has started forming. Okay, and it's left for you to now look for an entry, probably with a trend line, probably wait for the price. So I'll teach you support and resistance. You see the best place to place your trade. Okay, so that is for uptrend. That is for uptrend. Then downtrend starts from the top, goes up, correction, comes down like that. You understand? So we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. Okay, and this is what a downtrend. All right, so that is your so let's not forget the sideways market. Sideways market would do something like this. All right, when you think it's going to go up further, it starts coming down again, and then when you think it's going to go down further, it starts going up again and starts coming down again like this. So this is what you call sideways market. It usually have a floor and a ceiling. Okay, have a ceiling and a floor. Okay, you can do this many times. You can do this for 1 week, you know, on any time frame. Okay, so your job is to spot out the type of trend. So if you spot out that the trend is a sideways market, okay, you can sell here, sell anywhere there, buy anywhere at the bottom. Okay, sell anywhere, take your profit down here, buy here, take your profit up there, and that's how you trade a sideways market. Okay, for a uptrend, you can buy here. Okay, take your profit anywhere here. For a downtrend, you can sell here, take your profit anywhere down there. And that is in simple terms your types of trend and how you can maximize them for making profit. There's no market is no rocket science. The market is either doing an uptrend, downtrend, or sideways market, and just take it from me that you're not going to see anything different from these three patterns. Okay, so I hope you've learned something new in the video. Today's video, if you learned something new, give us a thumbs up. Also, if this is your first time watching any of our videos, you have come to the right place. All right, just click the subscribe button and click the bell to the right of the subscribe button so you can get notified whenever we upload a new video. All right, I'll see you in the next video. Cheers.